Good morning, everybody, and this is your DAX day trade setup for today. So yeah, another crazy day, big up and then an even bigger down. So big up day before on Wednesday, and then a massive move down yesterday. Not as much as what was going on in some of the well, on the Nasdaq specifically, and some of the other moves. So it's only 2.9%. Swing, or 3% should we say, versus almost 5% on the Nasdaq. So moving averages are sort of in a bearish move, but we keep going above and below the moving averages. When we're doing that, that is sideways price action, and it is not something I like trading. What is interesting is the oscillators have crossed over here on the 8 hour. This level that we are bouncing off at the moment, 13,836, is critical for everybody at the moment. So if that gives way, the bears are going to be in the money quite seriously, and if it holds support, then the bulls may have some structure forming for a move back to the upside. Personally, I am of the opinion we need to wait for better structure. Now, if you look at the 3 hour, we do have structure forming. We've got a tweezer bottom on a level. Then we have a series of higher lows that are forming, and the oscillators are grouping to the downside, all at a level. Only thing against us is the moving averages. So 3 hours saying that we have potentially have a bottom or bottom of range in, which is 13,836. We do have non-farm payrolls today, so I don't expect much until that data comes out. It will swing to the hour, and you've got an inside bar, pin bar, little range bar, engulfing bar. So a lot of structure happening here with a little trend break, and there's my little trend break there. So oscillators all grouped to the downside and crossed over. One of them above the 20, other one still not above the 20. So mixed signals there. But in my opinion anyway, I don't want to be short here. It's kind of stupid trying to jump in short here after the move. There was no real opportunity on the hour to get in. We'll look at the lower time frames now. But this is kind of the situation I would be paying attention to this afternoon anyway. That zone there is the area of resistance that I would expect us to pull back to. So that is 13,987, 13,987, 13,965. You can round that off to 1,400. That is the area that we need to wait for if we want to see if there's more rejection. So if there's more rejection up there, then definitely another move down to 13,836. If that fails, we're looking for a break and retest of this area here. So 13,836, looking for a move down and then a pullback to come and test it. So that's kind of the two scenarios that we need to wait for. And if we just drop down to 15-minute, let's just start with yesterday's price action. So you can see we started off sort of relatively tight, as I said, wait for the pullback onto structure. The pullback to structure did not happen. We did get a little bit of buying coming off this gap. So you see there's a little gap here, and you can see there's the buyers coming in off it. But it basically just formed a flag and then free fall from there. So yeah, hindsight, you could very well have got in this on the flag break, but I look for more structure than just a price action pattern. So at the moment, it does look like we're consolidating, but it could be consolidating for a move into this zone and then a rejection, or consolidating for a move into the zone, little bounce back, break up, find support here, then I suspect we're heading back into this area. So just get back to the hour. It is going to be confusing again, guys. It's really, we are range bound, so it's a case of maybe support at the bottom here, into the middle of the range, a bit of rejection for another move down, or break through the structure here, back to the top of the range for some profit taking up there. Very, very difficult to trade this kind of price action, and you can get burnt pretty quickly. So just an example here, you had this little flag here, a bear flag, pull back into the zone. This is where your flag was formed, and there was a gap here, but if you look to the left, not much structure. There is some structure there, but not really anything to write home about. You would have thought, okay, there we go, there's my trade, and immediately you would have been stopped out. So same situation could be brewing now. For me, it is sit on hands, wait for Non-farm payrolls. Let's see what happens at non-farm payrolls. See what that's going to happen. Nobody really knows what's going on at the moment. So the economies are not that weak at the moment. So you're not seeing equities fall at the moment. You are seeing bond market, the bond yield, and you're seeing a lot of other macro economics that are indicating that we are heading for bigger, a lot more interest rates and heading for potential recession. But not every indicator is saying recession, and not every indicator is saying more rate hikes. So it depends which part of the market you're looking at, and it really is. It doesn't make sense to a lot of people. So, and when that happens, this is what you see. You see us heading into a range, because some people feel it's going to fall, some people feel it's going to rise, and they're going to trade that narrative and stick to that bias all the time. So that's kind of what you're seeing. And for us as day traders, it's really difficult to follow what they sort of the direction that they're driving price. It's really difficult to do it because you don't have the structure you're looking for. Just want to close off this one thinking on the 5 minutes here. So the 5 minute structure here was probably a fairly decent opportunity. We broke through the 155 here, and rejection. So maybe from a Dow's perspective, but you need time on your hands for this. Sorry, not Dow, on the DAX. You need time for this, and that is what happens at the 155 again. But you want to see a sort of a grouping of the moving averages like this, because then that gives you an indication that you're kind of in a range. So break of the range, the downside, strong possibility that you're rejecting for a move. And maybe that's the way we need to actually switch to trade this, to start looking at 5 minute charts, and then start looking at the 5 minute charts at the open. Pretty much what happened here, just first hour of the open, and then we started getting some movement. So anyway, we'll start looking at that on the weekend to see whether we need to start changing our strategy ever so slightly and start paying attention to much lower time frames for shorter trades and tighter stop losses, and just be able to make some money again. Anyway, that's kind of my view at the moment. I am sitting on hands until non-farm payrolls is out. That's the last bit of data for the quarter, that the start of the quarter anyway, that I'm looking for. Once that's out the way, then we'll pay attention to seeing how we can adapt the strategy just to get some of these moves, especially these explosive ones, without getting hurt. Anyway, hope it helps, and we will catch up with you on Monday morning. Enjoy your weekend. Cheers for now.